What's up, guys? How's everybody doing? Let me just turn the sound down a bit. Give everyone a minute or two. How's the audio? Yesterday I streamed and I was playing Call of Duty at the same time. I wanted to test out Streamlabs, honestly, and I noticed when I listened to it after the fact, it sounded like my mic was really low. So just give me some feedback on the microphone and the background music, and then we'll get it started. YouTube link didn't work, Ryan. Just sent a BR channel on YouTube. Yeah, my bad. I didn't send a direct link to the video. I was just directing people to the YouTube, because when you go to the YouTube, I think it should say that there's a live video taking place. So yeah, we'll get started in a second. I'm just again, I'm like familiarizing myself with Streamlabs. It's really useful. I mean, as I went over it yesterday, it allows me to combine both platforms, right? YouTube and Twitch, which is fine for us because we don't monetize our streams. But if you were going to monetize your streams, that's where you run into an issue. You know, obviously Twitch and YouTube are competing with one another. So, but it's a great platform. I could, as you can see, I think you can see that there's a chat that pops up on the screen. So it should, I think it should, you could hear my washing machine in the background. It should combine the chats on my end, but I do have to pull them up separately. Let's see if I go to multi-stream. We'll get started in a minute. I'm just kind of feeling it out for a sec. All right, so sound is good. Yeah, but I do have to pay attention to the YouTube chat on a separate page. So how's everybody doing? Yeah, yesterday I wanted to have some fun. I did a Call of Duty stream. I got some interesting feedback. You know, I've been, I don't want to say I'm not sick anymore, because I am. I obviously feel a lot better. But the last 2 days I've tried to just like relax and overcome what is a mild sickness. I didn't sleep on Christmas night. It's like before I was going to bed, I already knew I wasn't going to fall asleep, and that bothers me a lot because sleep is really important to me. It'll give me anxiety if I don't think I'm going to get a good night's sleep. So I knew I wasn't going to get a good night's sleep. Didn't sleep at all, like sweaty the entire night. Didn't have a temperature though, but just profusely sweating. Had the air on, cracked the window, didn't do anything. Body felt like it was just, my entire body felt like a bruise. It's the best way I could put it. Extremely fatigued. So the next day, I made like a huge jug of water with, I had some garlic, cayenne, turmeric, pepper, tried to be really proactive about a full-on assault on my sickness. Cider, took a multivitamin, that really helped. And then like 5 hours later, started feeling shitty again. Today, feeling better, but different. So like yesterday, my throat didn't bother me, but today my throat really bothers me. Still feel relatively fatigued, but we're coming along. So I decided, I'm going to play some video games and I'll stream at the same time and take some questions. So kudos to anyone who's actually a gamer streamer, because it is, I like to pass time. Like if it's like shitty out, if I'm not trading, I'll hop on a video game. As I said, beginning of the pandemic with nothing to do, I got back into video games. It was interesting, needless to say. So we'll get started now. Thanks for tuning in. For anyone who's new, my name is Ryan, also known as Canteringclark on Twitter. I'm a co-founder of Block Roots with my partner, Josh Rager. Some things out of the way real quick. Just as a reminder, none of this is financial advice. I don't have the video on right now on myself, but the last couple of streams I've been wearing the hoodie. None of what I say is to be taken as financial advice, in bold. But yeah, none of this is financial advice, right? This is just my opinion on the market, strictly for entertainment purposes only, yada, yada, yada. You'll see that below, whether you're accessing from YouTube or Twitch. You won't see it if you're directly watching through the Twitter page. Hopefully you're not. But we are partners with Femex, and there are links below for those of you that want to try the exchange. They offer perps, spot, and yield, and you don't have to KYC. If you do want to KYC, you could trade spot without fees. So yeah, all that aside, just to get some, I guess, take the temperature on the market. How are we feeling right now? Peniel Dark, I want to say Daniel Park, but Peniel Dark, co-founder of Block Roots. Yeah, so yeah, 4-hour close is not the best. Into the gap, right? Took the highs, going all the way back to, what was that, the 7th and the 8th? So no, not necessarily the best close. No range breakout until we actually get a range breakout, right? So this is obviously, this is an area, I've been scalping BTC all morning. I am flat right now when it comes to any majors positions, BTC, no futures trades open. The only things that I have exposure to, so it sounds weird because the exposure I have to FXS and ICE is not futures, but DYDX I have exposure through perps. But yeah, we're still stuck within a range. So I'm actually talking with my arms crossed, like I'm just chilling, laying back, talking. So let's get into the stream. I gotta sit up and get my posture correct. Yeah, I mean, if we look at the last 3 weeks, it's pretty clear we're stuck within a range. Range highs would be an area where you would expect a good amount of profit taking. Pretty good area to TP into. I did the first time around before Christmas Eve. Talked about not wanting to hold positions. Now I'm obviously going to be looking to get pretty aggressive. I think that, as I said yesterday, the beginning of January should be pretty telling if we see institutions and larger participants start redeploying. Now that at that point it would be, first quarter, first quarter, beginning of the new tax year. So that should be pretty telling. Year-end flows, we've had those. Those are to be expected. Everything is at resistance. Yeah, so sorry, I'm trying to keep up with both chats. But this week's profile, if we just look at the weekly profile, this was a nice trending structure off of the lows. So we didn't get the sweep of any of the liquidity below these lows. So, it doesn't need to happen, but we talked about how this tail down here, this wick, a lot of the times you're going to trade into that. But we did have this 3-drive structure into the low. If you looked at it on the daily, it just looked like there was a lot of effort put in towards moving lower, and we couldn't really get that move. So, where's the market trying to go? Is doing a good job of getting there. It looked like the market was trying to move lower, but was having a really tough go at it. So if we look at this on the high time frame now, from a daily close standpoint, just defining this range, this does look like a retest of the top side of that structure, but I think it is important to, this would be the first go at it. Let me I don't have my drawing tools on this new computer. So this would be the first, let me change the ink. Unprepared. First go at it. Structure is clean on the way up though, but it's good to zoom out to get sort of the higher resolution pic or image or view, whatever I'm trying to say. I don't know what I was trying to say. Definitely didn't communicate it correctly the first time around. Higher resolution view right now, taking those highs. I think that's most important. That this 52 level is kind of the area where I've been. 52 up to 53 is an area where, like I said, you could expect resistance, good amount of profit taking. I wouldn't want to hold through this, regardless of what our feeling is on the high time frame, and going to the new year and Again, a lot of the selling pressure that we had towards the end of this year, even though it's not ended now, obviously, not yet, could still technically have some more selling pressure come in. A lot of that is sort of to be expected cyclically. Still, resistance is resistance, right? 53 is 53, 52. So we'll just go out to the weekly. I'd be much happier if I had my Epic Pen drawing tool on right now. So that's at prior weekly highest close. So we have, I think between 52 and 53, this gap right here, recovering that is, I think recovering that would be very significant, right? Whereas this would be, damn, I keep pressing the hotkey to use the tool. Might as well download it while we're doing this stream. This level right here. So establishing support above there, I think would bring us all the way back up to right around 58. Still using the hot tools. Can't get out of that habit. So 52, 53, right? This is a pretty significant area of resistance. You can see the low volume node. But it's a low volume node, right? When we zoom out, it's a low volume node that begins to pick up again almost immediately. So the underside of this structure, good amount of confluence in that region. Let's see. Yeah, I figured Daniel. I figured that was your name. So like I said, this structure locally looks good, right? Just trying to, I guess, shed some insight, provide some clarity as to why, maybe you would expect a pullback in this region, and wouldn't immediately have, one go that's successful. Even though, so what you would want to see at this resistance is that we're able to consolidate against it. And we do more or less what we're doing right now, honestly. So if we look at current funding rounds, neutral across the board, a handful, no, excuse me, not a handful. One print that's negative on BitGet, completely irrelevant. Bybit neutral, right? USDT margin, coin margined. BitMEX dropping, so BitMEX funding next round decreasing. OKX going negative. So from a future standpoint, in terms of positioning, just dropped my Pellegrino cap. It looks good. It honestly looks like we could be building something that sets up for a sort of larger squeeze upward, liquidate some bears. So structurally sound. No major signs of rejection. What would look ugly would be if we were able to drop back below this daily swing right here. So the first daily swing, which is, think about it as more or less the 50K handle. You wouldn't want to see 50K go. Sort of large round number, significant psychological level that we've overcome. And that would put us back within. This range. When looking at the daily. It's interesting because there's a lot more that takes place besides what happens on 4 data points on a daily candle. But the market does decide pretty heavily around either the progress or lack of progress based around these pivots. So, and I think that you could see, all right, so if we look at, just for example, if we go, I'll tag on some important VWAPs. So weekly VWAP. So our weekly, it's a new week, but prior weekly VWAP, right around 49. When we look at point of control currently for this current week, high volume node right around 50,800. So one sec, I'm trying to be smooth, but I'm about to press a hotkey again for a drawing tool I don't have set up. Hold on one sec. What we'll do? Hold on one second. Sorry, I said hold on 1 second. How many times did I just say hold on 1 second? Let me see if I could, do I have the Epic Pen drawing tool? Let's see. Hold on. Epic Pen. Just makes it a lot easier. You guys aren't going anywhere, right? Free. Why would I want Epic Pen news and alerts? All right. Bear with me. Intermission, right? So, I mean, to sum up, Bitcoin looks fine right now. Okay, install. Next. I accept the agreement. Next, install. Okay. So I'll take a look at the open interest in a second. Let me just get this moving. You know, because I keep pressing. I had hotkeys set up for the drawing tools in my previous streams. It just makes it a lot easier. So let's see. For pencil, what did I have? I had this originally as Control F. There we go. And then eraser, Control E. Perfect. And then undo. Give me 1 second. That's a box. Almost there. Promise, guys. That's fine, actually. I could make do with that. Here we go. Perfect. So just looking at this right here. You're looking at market put in a significant move up towards the highs. And just think of it simply as there's a lot more activity that's come in this region now. So that 50K handle, it seems like a smart level to reconsider things if we start falling back below it. Because if you just look at it, you're starting to fall back below where the bulk of last week's activity ended, right? Most of the distribution being between 50,000 and 50, right between 51. So just makes sense that you don't want to fall below where that positioning got involved. So 1 sec. I had a hotkey originally set up to get out of drawing tools, so I have to do that. So clear screen, no. Cursor. Hold on. Control Q. All right, so that should work. There we go. Good. So let's take a look at that open interest, because funding looks good. So when I say funding looks good, what I mean is, at these highs, what would look ugly if we were at the highs and funding was, moving through the roof right now, which is not the case. But as one of you mentioned just now, I can't keep up on which chat it was in. Where was it? Unpumped gems. So I like to look at the open interest to market cap ratio. I've gone over that before. But as you said, open interest is quite elevated, more so stablecoin margin contracts. So the question is whether or not this is, and you can see it reflected also in the open interest to market cap ratio, which is a good indication of how much leverage is in the system, being that these are futures products. This would look to be bearish, or I'd be much more concerned if this large increase was on, funding that looked more like this. So instead, it's been neutral. It's been negative at times, but it's been more or less baseline or neutral. But if, as you said, if we look at stablecoin margin contracts, they're at all-time highs. The last time stablecoin margin contracts were really high and elevated, it was much more clear with regards to the positioning, because funding was consistently negative, and there were a lot of traders that were hedging. And at that point, even myself, as I said, my behavior changed. I was trading USDT margin contracts as well, because I was like, I don't know what's going to happen. I don't know where our low is going to be. I don't want to be exposed to the underlying, because I only want to trade, and this is most of the time, obviously, right? Because Bitcoin most of the time is uptrending. I only want to be exposed to BTC margin perps if I think that Bitcoin is going to be stable, right? Because otherwise you're losing money by being exposed. So even having deposited BTC onto an exchange like whether you're trading Femex BTC margin or Bybit BTC margin, you're exposed to the underlying, right? So you don't want to be exposed if the market's moving down, because then you got to hedge with synthetic USD, 1x short. But if you're hedging with USDT margin contracts and you're getting flat, you have to buy to close that out if the market moves against you, and you also have to buy to regain exposure. So you get sort of that double whammy of buying pressure if you have a squeeze. You have the USDT margin contracts, and I think that, I don't know, honestly. I think the market looks good right now. It doesn't look overheated, so a large amount of this could be hedging. But what you could expect is that you'll probably get a big move from this. And what you would want to do is be able to discern, obviously, what side that's more likely to take place on. And if you did have an extreme value in funding, it'd be much more telling. If we had this open interest right now the way it is, and what I like to do is, for example, we're looking at even highs right here. But if you look at open interest, look how far. So one measure is, okay, so for example, we are, 200 basis points off the highs, just under, right? So 1.7%. If you look at the open interest to market cap ratio, that's gone up 20%. If you look at open interest from that point, that's gone up, 30% for stablecoin margin contracts. And usually I'd be looking at something like this and saying, oh, that is a trap setting up, right? When you have a level broken or a resistance or support retested, and the open interest the second time around is much greater. But it's usually the case that also you have like the funding that corresponds with it. Either if the market's moving up into a trap, funding is increasingly negative, or if it's trapping shorts at the lows, funding is, if it's moving up, funding would be increasingly positive to say that longs are being trapped. And if it was moving down and you had that big disparity in open interest, you could say that shorts are being trapped. So the only thing that's confusing right now is for this, the corresponding funding, which has not been really one way or the other. So moving down now. Yeah, not the best 4-hour move, especially when you consider that, right now you have a swing failure. But it's not like, you had a fair amount of positioning above those highs. Like I said, from a derivative standpoint, this is not reloading. Hold on one second. But it's not like we saw any kind of major flush above the highs. So if you're looking at the footprint, honestly, now that I reloaded it, it does look like you had some aggression. But again, it's not showing up in funding. And if anything, now futures are selling a little bit harder. You can just see that between, if we look at, difference between Coinbase, Bybit, and Bitfinex. This tap right here probably offers a decent little bounce. If we just look at sort of the top side of this region right here. And that puts us back into more or less a low volume area within today's profile. But we're back within value, so, and I'm looking on the top left portion of the screen. We're back within today's value, but it's still a day in progress. Maybe it finishes out a little bit more balanced, but what I'm talking about is we're retesting back in this composite that value area high. So we'll take a look at some alts right now because Bitcoin's not that exciting. Frac share. So let's take a look at that. Turn this off. So this is something that I mentioned. I like to outsource sometimes with alts because it's just tough to keep up with everything. And Andrew Lee was one of the first people that recommended this. Um, so I started building a position, focusing a little bit more on it. I've been sharing it a lot more recently. Structurally, this looks great. It looks like our next target's 27. But there are, the reason that this is, I think, there's more reason to be bullish on this is there's a good amount of supply sinks. So things that generally take supply off the market or make it less easy to move around. And there's also a burn mechanism that's involved with this. So just from the standpoint alone that this structurally looks good and that it's not necessarily all over everybody's radar, I think makes this an attractive play going into the first quarter of 2022. So this is something that I have a significant position in. DYDX is another one that we just look at. I mean, it doesn't help right now that Bitcoin has just put in a swing failure around a similar set of structure that DYDX has that makes it look bullish, right? So what I mentioned about DYDX was there was no major rejection into this gap. And since that's kind of old at this point because now it has started to roll down a little bit. But basically what I was looking at was this low volume region, right? And this an area where you would look to see initial failure. So the market accepted into that area and didn't have any kind of very significant snapback. Now it doesn't help that the market is across the board having a decent period of red. What else? ICE was another one. I mean, I have the 20 period moving average on this right now. This kind of looks self-explanatory, right? Nice flip in this $20 region. Consolidation upward right now. I mean, technically into resistance if you look at this pivot. But this and Spell, I think, have reasons outside of technicals alone, if just for the fact that Sesta has like a cult following. So, and not for nothing, like when I'm looking at this chart, I also know that when it's compressed like this, it's like the forced perspective from that makes it look much more bullish. But I think there's a handful of reasons to be bullish on this. If just from, like I said, the fact that there's a cult following behind Sesta, and that and Tetranose backing alone can result in a ton of reflexivity. So let me just go through the chat because I haven't been focusing on that. One sec. Get this back. Let's see. So the Agar orders. Hold on one sec. I'm just gonna go make sure I didn't miss anything. Okay, one sec. These Agar windows up here. This is spot. This is swaps. And so this originally, I have to reset this because what is this set to now? I just I set up my new computer, and when I opened up Brave on this new desktop, I didn't have all my bookmarks and everything saved over, and I guess I didn't have the updated file for this template. So what I have to do is fix this. I originally had this for spot. This for perps, and this I want to have just for large orders that hit the tape, like in excess of 500K. So just filtering out the large lots. And then to the right of it, these are all the exchanges. on the low time frame. You can see them listed. And then below it, I actually have some other stuff too. So I have the CVDs. So I can't lift this higher so you can see because this is on the top of my monitor, my uppermost monitor. But I have Perp CVD, Spot CVDs, Bifinex CVD, a couple other things. And then I have a liquidation panel below the tape. So below these tapes right here, I have the liquidation panel. Yeah, some people don't find the tape useful. The tape is really just a live version of the footprint, so it's hard to say that it's not useful at all. But the footprint obviously is like a working memory of the tape, so you're not going to miss anything if you're looking for where the aggregate of aggressors have come in, which is, one of the main components of my trading approach. Looking at where the market is getting aggressive and how the market is behaving after the aggression has come in. The tape can be useful though when you're picking up on the relative speed of the market. So, but this is the tape is something that's obviously with technology has become, or with different tools has become more obsolete. But level 2 is not the same as tape though. So those are two different things. And I'm not using Bookmap anymore, no. I'm just catching up to some more of these. Yeah, Femex has grown tremendously, and you could hit the book there with easily high 6-figure, 7-figure positions, low 7-figure. Sorry, just going through the bottom. Lars, yeah, it is interesting because I've mentioned before the idea of separating the tape by sound, one tone versus or one pitch, like a low pitch for spot, a high pitch for the futures. But you're going to see that a lot of these are connected either way through algo and bot activity. So it's going to be rare that you have the spot market move without the futures market, but you can pick up on disparities in the opposite direction when the futures market is ripping, rather when futures are getting more aggressive over spot. But there's a lot of different ways you could, again, pull up this information. You could look at basis between futures and spot exchanges. I don't know, honestly. So Bookmap, like heat map was never something I really cared to focus on. And I wanted to use Bookmap if it could more or less substitute for what I was already using. And I had that conversation with them because I was ultimately going to partner with them. I did, and then I had to cut ties, so I had a brief partnership with them. But I only wanted to use it if it was basically repackaging what I already was using, because otherwise I don't want to add anything. I have no need for style drift. I do, as I've said before, like trading crypto, there's a ton of new things that come out all the time, and it's easy to like get captivated by new products and new tools. But if you're not getting anything from it, it doesn't make sense to shift, right? So I already get what I need, and I thought that I'd be able to replicate that using Bookmap. So the volume dots, CVD, but I don't know. It just ended up being something that took up space more than anything else. And while it is good to see how the book is shifting in terms of market depth and looking at resting liquidity, it's not something I prioritize. And there are ways to already pick up on that. And if anything, there's a ton of other platforms where I could pull up a heat map with less obstructions in the way of doing it. So Bookmap is pretty intensive when it comes to how much of your system it uses. So let's take a look at some other stuff. Do you guys want to take a look at runes? Someone said. So I always get excited when like a new platform comes out, for order flow, in particular. I was going to get into other platforms, but there's really nothing else besides what I'm referring to as order flow platforms, not trading platforms. But In silico has a great terminal, but I just keep coming back to using Quantower, even though I had an issue with them. It's kind of like I said in the last stream: the devil you do know is better than the devil you don't know. And I think it would be very odd for. I think it would be the equivalent of lightning striking twice for me to have the same issue that I had last time with Quantower. And I've changed around how I position myself across exchanges either way. And Quantower is only for scalping BTC, so I don't think I'll have an issue moving forward. I mean, not for nothing, like asking some pairs right now, most pairs, excuse me, they kind of look like they're all doing the same thing. Alts are selling off for a really long time. Blue chip DeFi underperforming for a while, and now we're seeing bounces across the board. And I talked about this 2 weeks ago. I talked about using things that I don't normally use just to start filtering out some of the better opportunities. And I was talking about using Heikin-Ashi, MACD, MACD, 20 period moving average to here. Let me change something up. Where'd it go? Oh, it saved it incorrectly. One sec. So I talked about using either the 2 or 3 day versus just using something like the 1 day or the 1 week. Sort of find like a sweet spot between that, and filtering out opportunities based on the 20 period and the MACD. And really, what it's really you don't, if you've been trading long enough, you don't really need to look at certain things like this. These are lagging indicators, right? Price is it's already doing what this is just starting to show. So you can see that momentum has slowed to the downside. But with alts, after really sustained periods of downward movement, you're going to have mean reversion at some point. And once that mean reversion starts to show up on tools that are used by your position traders, your swing traders, and occur on the high time frame, it's just more likely you're going to have more substantial flows show up behind that change. So flipping something like the 20 period after treating it like resistance, so 20 period moving average, starting to bottom out. If you look at the MACD and turnover as well. I was looking at this a while ago just to get an idea of what things I wanted to start focusing on more. But most alts are doing this now, right? Most alts are doing the same thing. I decided to only trade crypto in like mid of 2017. And when I started to trade crypto originally, it was like more passive, so more of a trend follower. So when I originally started trading crypto, and I was trading legacy the way that I trade crypto now, I was trading crypto basically just from a trend follower standpoint, just high time frame trades, using moving averages. And at the time, crypto was trending pretty strongly, so it was pretty easy to just have like basically a passive indexing approach. No, I don't think Light has been taken prisoner. DYDX, what would for me be invalidation? I mean, it would probably be something along the lines of dropping back below 975. But it's, DYDX is something that I'll paper hand. So don't hold me to anything. I will paper hand this because it's not something it's only something that I repositioned in recently. if we started falling back below 975, what I just want to clarify is like I'll paper hand things because I think that after we break certain levels, it's just more likely we revisit lower ones before even continuing to resume upward trend if we're going to do that. So in that case, like this would be my level that I want to see hold. But it doesn't mean that if we break it that I think we're moving much lower. It just means that I think that if we break this, there's a high probability that we probably form a support, in this region again where that cluster of activity took place. And I'd rather not be around for that, right? What I would look for the trend to change, if we're looking at a trend change, is if anything, now we're able to hold the 20 period, right? And we're able to hold this change in structure. So, your change in structure is pretty obvious right here. Low, low, breakdown, retest, break up, hold. So really, $8.50, $8 is the area where you would want to see ultimately hold. But I'd rather get out before that. $20-period moving average is a pretty good line in the sand, and I've gone over this forever now. Pretty good line in the sand, right? Dynamic resistance and support in strong trends, either trends down or up. So we could be looking at the first real flip of this level right now. Maybe price goes on to develop further though. But again, it's nice when this lines up though with support. So that 20 period right now is right around 48.7. There is a there's this cluster. We'll just say that this region right here is a very significant region, right, where this flip occurred. It's back within the range at that point, back within the higher time frame range. This would be an area though where you could start looking for, I guess, maybe things to further develop because of that. But I don't know. I'm very I guess I'm always a little bit more doubtful. Because we've had a significant move down, right? So you expect relief no matter what. I think we have the cyclical flows towards the end of the year. All right, that's good. So you expect that. So you have right now equities continuing to make new all-time highs. That's good. But after a move down of this magnitude, I've been saying for a while now, like the phrase big ships turn slowly. This would be a fast change of direction, right? I mean, I guess what I'm doing is kind of comparing it to this region, even though there's different structure here. It's tighter. This correction, if we just look at how this correction transpired, I mean, let's see, from drawdown to new high, from high to, that was what, 29 days, from high to the next. So that's not a good measure, actually. More like this. Some similarity between this structure. Not really, but I think you see what I'm talking about, right? Soul. Yeah, totally. I've definitely outperformed how I would do in Legacy. Yeah, just crypto market is an easier market to trade. It just is an easier market to trade overall. Let's see. ICP, yeah, not familiar with ICP. So no buzz on my end. And I don't have any opinions on the long term with Matic. I don't really have opinions on long term alts, period. Like I say, like always to be completely transparent and honest, like if I talk about an alt and I'm like gung ho on it, I could be out of that position a week later. And I will always be more skeptical of alts than anything else because I've been around now for a few cycles. So I've seen this game play out so many times before. But play the game nevertheless, right? Find out which alt is like the chosen one by the market at that period. Ride the wave, and when the market divorces that idea, divorce it with everybody else. You're not going to do anything on your own, right? The idea of momentum is getting behind something that has energy, right? Riding that. Yeah, I think this is pretty clear at this point. I mean, if we're able to take this high now, the only thing that's like, consolidation at resistance, if you're going to consolidate longer, it becomes a situation where you kind of have to either sack up and buy early or just understand that there's a higher chance at that point, the longer that you consolidate against this region, that you don't get like the perfect retest, right? If we're consolidating against here and then we ultimately break up, it's more likely that the market covers this distance in a short period, in a short amount of time. And then you're wondering, up, and then what you're left to do is wonder up here, do I buy it up here now? And then at that point, your risk reward is, it's kind of, it's uglier. There's more things to think of for you. So there are cases where I will, buy resistance and sell support. If we were to continue to consolidate against this region, I'd be more prone to buying this. So that all depends on lower time frame, how we're able to continue, if we're able to continuously bid up. So what that would ultimately look like, right? It would be if we were to continually hold more local structure. So I'll put the daily profiles on this just so it's a little bit easier to see than the EXO charts at the top. And the horsepower coins, I think, are honestly, I said ICE, FXS, and DYDX, but DYDX is not really like, I think that DYDX is a bit more contingent on structure breaking and holding, whereas ICE and FXS have a little bit more going for them. And the more tailwinds you have, the better, right? If you only have technical tailwinds, that's all you have. Like once you're, if you had a support and that's your, the idea behind your positioning is that price is flipping levels and, retaking levels and the market is accepting those new levels. Well, if you re-accept back below that level that you're assigning importance to, then what's your argument, So I think honestly, ICE is from a structural standpoint, and as I said, from Sesta and got guys like Tetranode Tetranode could become this market, right? If he'd said, if he wanted, he could hold this thing up forever. And FXS, like I said, has the supply sinks and has the structure. So I think it's FXS and ICE, honestly, if I'm going to bet on any. Sol. Against ETH, against BTC, looking good on both sides. Like I said, I'm always more skeptical, so I just don't want to be the dummy that is buying resistance and buying the lower high. And Solana ran for a while, so I talked about this with a friend recently. I'm just, instead of like actively trading some things, I think Solana is going to be a long-term play. I am actually just starting to dollar cost, for coming into the new year. I'm going to start getting more exposure to a bunch of things across the board, but with Solana, I'm just starting to dollar cost average into it, honestly. I mean, there's not much to say about the chart, so. I mean, we're 2 weeks off of the lows, right? I mean, this is, you could say that this level right here obviously has some importance, right? High, consolidation, breakup. This was similar to ETH back before the May drop, right? Where ETH had the consolidation. ETH was actually holding it, but then ended up breaking down either way. So flipping this region, right? So that $200 handle is a pretty good region for us to hold if we could hold that as support. And then I think it's just likely that you do what you did back within this prior range. You know, move from point A to point B. Trade from 2 to 240, 230 area. But I still want to kind of act like with trade, not, with Solana, I'm going to start building, like I said, I'm building a longer term exposure that I think is honestly a 5-year bet. And I think it's like the same thing if I had gotten involved in, I don't even want to say that. It's not. With other alts, I think it pays to just respect structure, honestly. Because there's going to be a lot of alts that are, for example, like DOT. I think that everything right now is bouncing, but I don't think we're in a rising tide moment. So I guess that's the best way I can put it. Everything right now is bouncing, but I think that, even in a market that has completely shifted, you're going to get bounces, right? So I think it'd be a bad idea to assume that the market's just in a rising tide position now and say like, okay, anything that's closer to the lows right now is still a good buy. I think it's best to respect structure. So for example, like DOT, I think it makes sense to just consider that this could possibly be, maybe we're moving up to 36, but this is a lower high in the making. This would be an area where this would reject and continue to break down. I'm not saying specifically that, but I'm just saying I think it pays to respect the levels for things that they've just been moving down for a long time now. So you'd expect big bounces, but I'm not expecting anything more than that. So I guess what I want to say is it's good to be excited about where the market is right now, but it's another thing to assume that everything is going to just start taking off again. CRV, let's see, curve. So I like curve. It's always good when, if we look at, just for example, if we just look at the Binance chart, it's always good when price completely recovers, from its listing all the way back to that listing price, first day. Usually you're going to get a pretty significant expansion into that region. At that point, anyone who's sold is wrong, right? But what I hate this kind of structure where you have this choppy upward grind where it always seems like the next candle's the breakout, right? Because you're constantly just retaking prior daily closes. And it always looks like, okay, this is the one to hold before we get to the bigger expansion. Meanwhile, this could just continue like that, chopping along what is, directionally, it has a bias overall, but it never really gives you that trade that just pays, right? So I like to, and this sounds weird, but I like to be in trades that pay very quickly. So, pay very quickly means like, if I have a level, like let's say that this is, I'm not in curve. I was in a curve position earlier, I think last week. I have no perception of time anymore. Since I haven't had perception of time for like the last 4 or 5 years. Bull market just made it worse. So if you're on your own and you're not working for anybody, you really have to make sure that you follow your own schedule, because scheduling actually allows you to compartmentalize things, at least mentally, and have memories that have, I guess, some you could, go back and reference points in time with some clarity. Even though, you know what I heard? It made me kind of happy. Joe Rogan, who's someone I used to listen to a lot more. I think he's kind of, I don't know, he's gotten a little too much for me recently. But even he said, he's like, I can't recall with any certainty my day yesterday. Um, but when I say like something that pays quickly, if I have an area that I'm really focused on and I think it's like a market structure defining feature, or area within the chart, like contextually important level, I want, if I get involved, for it to pay quickly. Like I want to get in the move that immediately starts moving up, and pay quickly mean I'm already seeing like a good amount of return from it. I want to be able to take my risk off, right? So things like this, they don't pay quickly. Yeah, like if you buy the dip, right? But then you're getting, it's almost like all you're doing is S chopping on your way up. So it never gives you one of, like it never gives you one of these, right? Where you could start reestablishing a consolidation much further up. And it just makes me it makes it hard for me to hold positions. A lot of things have been doing this though, right? And then they ultimately do give a larger move. But you see, like even, I mean, not so much, but there's been a lot of alts that have done this tightly more than, consolidate flat and then break and then consolidate flat. And I don't like that, because I don't have, I guess, during that period, that's where like fundamental conviction matters, because you're willing to weather those fluctuations. For me, I'm like, when I weather them, I find that, and this is like, so how do I put this? I know that if the market moves against me to a certain amount, that I'll be more likely to, so the more the market moves against you, the more likely you're going to want to sell, right? Even though some of you might hold on even tighter. I don't like to be in things that cause me to think too much, put it that way. So even if I think, hey, maybe the longer term trajectory is upward, I know that like I'm not a fundamental based trader. So I know that at the end of the day, like when it comes down to it, when I look at that chart, and I arrive to my desk and I see my P&L maybe it is red for a period of time, I know I don't really have the sort of wherewithal or knowledge to be confident in that position. And I don't like to put myself in, my multiple selves, right? I don't like to put myself in that position of having to, flip a coin. So I try to avoid that as much as possible. So, what I learned in the long run, it just makes sense for me to cut things because I could stack compounding gains. And most people would be better off, honestly. There's a lot of different arguments. Most people would be better off holding, but would they in a lot of pairs? So if we just look at the last 2 days profiles, basically the same story, right? But coming from different directions. We're built backwards. So thick at the low, you have the B profile. B is good. Just, for the concept of where the market is soaking, holding that level is a good sign for either participant in that direction at that point, right? So that was going back to the same idea behind, this region is just a region where a bunch of people got in position. Let's hold it, right? If you're bullish, you don't want to see us trading below, consolidations. So we have a B, price is holding. I mean, honestly, you would want to see that this region right here does act as support. You've traded back down to the bulk of today's consolidation. You're basically retesting the value area high of this prior area within this composite. And it could continue to move up like that, right? Soak, consolidate, squeeze up, retest, squeeze up, you know, soak. The idea is you just want to see, and regardless of what form it comes in, and it goes back to me talking about VWAP and the use of it, you want to see that wherever risk is being put on, that you're not trading, you know, it always a matter of what position you're in, right? If you're bullish, if you're long, you don't want to see that you're trading below where buyers and sellers got positioned. And if we consider the fact that overall open interest has gone up for the, you know, more recent structure, you don't want to start putting longs offside, especially if they're aggressive. But they haven't been as aggressive, so yeah, dumb bulls outperform smart bears for sure. Yeah, that was something I tweeted, but it's not I didn't come up with that. Whoops, how did that happen? Let's see. BitMEX going negative. That's good. Everyone neutral. So that's a good sign. So, anyone have any other questions? What do we hit first? I don't know. No, I am reading the YouTube chat. I've been answering some questions from the YouTube chat. Yeah, I know traders who do well with just the. I just caught up to someone else's question I missed. Yeah, I mean, you could do well trading just a trading view chart. It's not that matters at the end of the day, right? So do I think 53 or 49 first? I mean, I wouldn't want to see 49. We have like this pattern of upward progress that's taking place right now that looks pretty good. Let's see, Wi-Fi. Let me just take off the 20 period because it's just flat. So if you just look at this entire structure right here, right? It's pretty obvious where most of the activity is confined. Between this region, right? Spike up, right? Below initially, but where most of the consolidation is. So it's always, you know, from just a range standpoint, reaccepting back within the lows, you're going to expect that what midpoint is resistance, but you'd be looking towards the high for things to continue. That sounded funny. You'd be looking towards the high for things to continue. I mean, your next target would be the highs. But this looks like it was a catalyst pump. So whether that was something that Andre said, pretty sure it was, honestly. I'm always suspicious of that because catalyst pumps easily can just start getting, they could just start melting, right? You get market long behind something, but the something already happened, and those participants are waiting at that point for much more to happen. So if you get behind something like this, you want to see that at least it's maintaining lower time frame structure. So this is, you have this sort of little flip that's taking place. But I would monitor this. I would want to see that it continues to maintain this progress right here. Otherwise, once it loses these lows, what's it saying? It's lights out. It just becomes much more likely that you close out this gap. And I think that was a catalyst pump, so I think you just have to be mindful of that. But I mean, if you look at Wi-Fi just from this standpoint, everything has been within here, right? So, I mean, this might sound silly, but because it is, it is at this point, we're talking about a 35% move. But if the market is able to trade back above, 45, let's just call it 45K, pretty much everybody who has sold this is wrong, right? Mind you, this is a huge sort of flush, but mostly everybody who has ever gotten involved in Wi-Fi, if you're back above 45, is wrong at that point. And the market moves based on what? Disseminating new information, reflecting that new information, people being wrong, right? That battle taking place. So I think that's a good way to look at it. These consolidations, when you have a consolidation that's really clean, just think about it in that terms. Well, now I'm starting to draw all over the place. It makes that useless. These are the regions which buyers and sellers were right and wrong. If you're above it, every seller who sold is wrong. Now, in this one, it's not as precise because you had this big spike up, but that's pretty much the best way to think of it. If you have a clean consolidation, that's what that means, right? So I guess the reason why I'm stressing it with this chart is because this is the entirety of Wi-Fi's history, right? So, on major exchange, on Binance. So good signs in terms of like macro tailwinds, VIX back down. So that's great. One thing I was saying was you're not going to get a Bitcoin bottom on a rising VIX. Risk assets it's one is happening while the other is happening. So when risk assets are getting crushed, when the VIX is going up, volatility is increasing, risk assets are getting crushed. In legacy, it's not going to be good for BTC. So your VIX index is your fear index, right? So this moving back down to a safer region, safer for risk assets, is always good for BTC because it is more often than not is just a risk asset. S&P new all-time highs. So that's that goes back to the way that I was just mentioning the concept of who is wrong and who is right. Anyone who is bearish on the S&P right here is now wrong. So might want to fight that battle a little bit higher up. So this is always good that we're making new all-time highs in legacy because crypto is beta to that. SHIB, let's see. I just want to go through some of these real quick. Gold doing a good job of storing $1,800. SHIB. Let's take a look at SHIB. Yeah, I mean, it doesn't, I don't know if I'd say it looks insane. Just a bounce now, finally, on the weekly. I mean, if you could hold this region right here, which is kind of what we're doing right now, squeeze upward would, I think, would bring you to this prior pivot. But as I said, I wouldn't get too over the top thinking that everything is just on its next leg up. Everything, right? When I'm saying everything. A lot of things, Bitcoin is going to continue to move up, and let's say we're looking at new all-time highs 2022. There's going to be a lot of things that move up. But if we're just getting a big bounce right now, just expect that, right? I mean, prepare yourself for that it's just that you're getting a big bounce after a big decline. Yeah, Rios, that's a good idea. That's a good way to look at it. That cloudy docs gave me chills, though. Yeah, that was really interesting. There were some pretty good signs. I think things that stood out about cloudy. but they were just easily overlooked. I don't know. There was something that was captivating and entertaining about his personality on Twitter. But there was red flags in that behavior as well, right? So there's a lot of people that probably don't know what we're talking about right now. Like he was saying things about like the only thing you need to do for the ES and the S&P is focus on the DOM. No, that's like one way that people trade it, right? If you come from a prop environment, if you're scalping, the ES or the NQ, yeah, of course, but you're not going to dictate like overall direction from that. So there are a few things that he said, like, oh, if you see a large seller, that's the only thing to focus on. It's like, no, we're all familiar with the concept of spoofing and people, painting limit order book that looks like intentions, but they don't have any intention to actually execute. One. So someone said one. It's doing that thing where it's just grinding upward. I don't know. This chart doesn't really do a whole lot for me. And I don't know anything about it from a fundamental standpoint, so can't really say anything on that. Time? Oh, yeah. Sorry, dude. I didn't... No, it's like I have two chats that I'm trying to look at. Yeah, shreds. That's the thing. Like I feel like a lot of people. I'll take a look at time too, but I'm sorry. We're talking about cloudy underscore. I think it was CL. Yeah. There was. Where is this? Where's time? Is this it? Chronotech? Maybe it's better if I look at it on a platform like this. A couple people where the wool was pulled over their eyes, right? Yeah, I don't know what the fuck. Like, I need like a USDT chart or something that I'm familiar with. Otherwise, we're just looking at its performance versus AVAX. Is there a pair you want me to look at it against? Because I'm not familiar with it, so I'm going to seem like a dumbass trying to chart it. I mean, against ETH, I think ETH is probably a good barometer. But I don't know anything about it, so I know that a lot of people are talking it up. Let's take a look at some things. But anyway, back to, is it Wonderland or Chronotech? Just give me some feedback in the chat, and this way I could find it a little bit better. Yeah, there were a lot of people that were tricked, right? Which kind of was like a social validation for, I'm sure, a few other people. Like David Bell, a few other pretty significant people on FinTwit vouched for him. I think unknowingly, though, right? They were fooled, and it made them a little bit more liberal with their willingness to sort of back him and retweet him and, refer to what he said. And I think everyone felt kind of dumb after that. I found him kind of entertaining, but there was a lot of things that were overly like rudimentary that he was saying about markets. And like as I've become full-time crypto, I have definitely like I guess the best way I could put it is like crypto is unprofessional. And if you're an independent trader at this point and trading crypto full time, it's easy to get swept up in the behavior of CT and like the zeitgeist of crypto. It's a young man's market, right? And I've definitely seen how, just like looking at my behavior across my Twitter presence, Twitter history, it's easy to be like immature and I guess shoot from the hip and talk without censoring yourself, and maybe talk how you would talk amongst your friends if you're sitting at a bar. But it's one thing to do that, and then it's another thing to say that you're like currently fund manager pulling in 8 figures a month or whatever he was saying. Um, I don't know. There was a couple things that were pretty concerning. Wonderland. Thanks, man. No, he wasn't scamming anybody. He was just a kid that was acting like a fund manager, um, but intermittently like being really immature. So Wonderland, right? Let's. Oh, so it's this time versus AVAX, right? Yeah. That is the okay. So I'm looking at the AVAX pair, but on that other platform. Here we go. AVAX has been really strong though for a while, so I'm sure a lot of pairs have suffered against it. But I don't really know anything about this. Yeah. Well, you know what the funny thing is about yeah, so that's like that was the biggest thing, Junkins. The first time I listened to his voice, I was like, wait a second, this guy sounds really young. Time Mim, okay. Yeah, it's the same story. So maybe bottoming here, but I don't have much more to tell you about it. Yeah, and so just to wrap it up, talking about that kid Cloudy, he had been posting like for the last few months as like a very impressive fund manager, with very interesting language, but or just his demeanor. But like a year ago, his posts were all about being a student and trying to make it, and it's like, did he not think that people could scroll back? I don't know. The people that exist on Twitter and have the ability to go look into these projects and look into the code, they have enough time in their hands, obviously, to do a lot of things. So being on Twitter knowing that people literally spend all their time digging stuff up, kind of dumb. Neck. Yeah, Near is another one, right, that a lot of people are talking about. Probably going to wrap up the stream in a minute. I don't know what I'm looking at. It's Nectar. There's too many of the same things. Yeah, I don't know what neck is. Yeah. All right, yeah, I'll take a look at Algo and then we'll wrap it up. As you can see, I had an alert down here that hadn't taken off from a while ago. I mean, ultimately what we want to see is pretty obvious at this point, right? Prior consolidations to act as support if we're going to come back down and retest them. So this would be a pretty critical area for us to hold. I mean, if you're looking for a long, you would want to see the 150 holds. But this could, obviously just go on to do what it did in the past, consolidate, break down, and go on a much longer correction. Which a lot of alts, like, what do? They have very similar structures to ones that they've had in the past. especially if it's just the same people trading them and pumping them and dumping them. All right, I'm gonna hop off. Nothing really interesting right now. BTC is not looking bad. FXS is my favorite horse in the race right now. But we'll do another stream midweek. And until then, everyone have a fantastic evening. I'm going to do a call-in tomorrow, by the way. So for those of you that are unfamiliar, you guys can hop on. I'll share the link, and you could hop on the call with me. And it's similar to Twitter Spaces, but it's what's it called? It's recorded. So till next time. And if I blocked you on Twitter, I probably blocked you for